You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cashflow Podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow Podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is multifamily syndicator, podcaster, ultra-marathoner, family man, and all-around cool dude and family man, Jason Yarusi. Jason is the founder of Yarusi Holdings, a multifamily investment firm with over 800 units under management. His firm specializes in repositioning multifamily properties through operational efficiencies, moderate to extensive renovations, and complete rebranding. In addition to his real estate investing endeavors, Jason also hosts the Multifamily Foundation Podcast, which covers all things multifamily, from finding deals to raising money to asset management. Guys, if that wasn't enough, Jason also runs the New Jersey Multifamily Foundation Club with over 2,000 members that educates on the merits of real estate syndication and multifamily investing. And so I'm excited to introduce Jason on to the show here. But before we dive into it, guys, I've got a few housekeeping items and updates I want to share with you. The first one here is our third mobile home park investment fund just went live a few weeks ago, and I'm excited to say that we've been overwhelmed with the interest. It's just a great time, and mobile home parks along with multifamily, which we'll talk about today, have been really the two darlings through this whole pandemic as far as collections are concerned and just overall stability. And so we've had a overwhelming interest in this third mobile home park fund. And this current offering is a Regulation D 506C. It's open to all accredited investors. For those that don't know, my team and I, we've specialized in mobile home parks for nearly a decade now. And I'm kind of aging myself by saying that, but it's almost been an entire decade. Way back before most investors even considered this amazing investment vehicle cool. Everyone kind of snubbed their nose at it before, but now it's become one of the darlings of the commercial real estate investment space. And, the secret's out now, and big PE firms such as Blackstone, Carlyle Group, and the Apollo Group, just to name a few, are some of the big guys that have jumped into the space in a very big way. And so if you guys want to learn more about partnering with my team and I on our future mobile home park assets, you can go over to our website, sunrisecapitalinvestors.com. Again, that's sunrisecapitalinvestors.com. And I'm going to put that into the show notes as well. And just go ahead and click on the Get Started Today button, and you can fill out this short form and access our PPM and our offering memorandum. And we've got a number of exciting off-market deals in the pipeline, and looking forward to speaking with you about them. Moving on here, guys, we recently launched, I guess it's been a few months now, so I don't know if that's recent or not, but in any event, we recently put together a referral or partnership program called Bring Kevin a Deal. And this is where we'll pay you as much as $200,000 for any mobile home park or parking lot. We also invest in parking lots that you refer to us that we ultimately end up buying. To learn more about this opportunity and to download my deal acquisition criteria guide and to submit a prospective deal, you can go over to bringkevinadeal.com. Moving on, guys, if you love what we're doing here at the Real Estate Investing for Cashflow Podcast and you haven't done so already, be sure to subscribe to the show. That way you'll get notification when a new episode goes out. And also, if you haven't done it, please leave a rating and review. It's how we attract awesome guys like Jason to the show. And lastly here, before we get on to it, I want to remind you of the free 30-minute phone call that I offer each and every Friday. This is where I set aside a couple 30-minute time slots to connect with you. I've been doing this now for almost 6 years. It's crazy how many I've spoken to over the years. And it's just my way of giving back. There's no ulterior motives. I won't try to pitch anything or sell you anything. This is just a way for me to connect with you and share this connection or passion that we have for real estate investing. It doesn't matter whether you're brand new or a seasoned pro. Either one, I'd love to meet you and chat with you. Go to kevinbuck.com to get signed up for that free 30-minute call. And all I ask that you do is just take a few moments and put a few notes in there when you're scheduling this call about what exactly you'd like to chat about, whether it's specific questions or specific investment advice, what have you. That way we can spend our 30 minutes most efficiently together. Okay, guys? And so now, without further ado, I'd like to introduce the man of the hour, Jason Yarusi. Jason, how you doing, buddy?
I'm great, Kevin. How you doing?
I'm doing awesome, man. You're looking good too. You're
keeping moving every day.
Yeah, I see all these people that talk about how much weight they've gained or how much more beer they drink now during this pandemic. And looking at you, guys just like packed on like 30 pounds of muscle. It's freaking awesome, man. Anyway, I'm joking with you, but I watch your Facebook posts, and you're just absolutely crushing the game of life. And very exciting to see you doing some of these big fitness events. Ultra marathons have been one of them. I'm sure there's other things as well, and we're going to definitely talk about that here today. I was a big runner myself years back. Definitely never did an ultra. Done some ultra cycling events, but never ultra marathon. But
nice.
I definitely highly respect what you got going on. I know how much work and effort it goes into doing some of those big events. Again, I've never done a 100-mile run such as yourself, but I can only imagine. So anyway, I'm excited to chat about that, my friend. But what I'd like to do for those that don't know you, Jason, that aren't familiar with you, your story, or what it is you do, maybe just take a few moments and tell us a little bit more about yourself, and also how you found real estate as an investment vehicle.
Sure. So I live in New Jersey with my beautiful wife, Peely, who's also my partner, and we're on the podcast. We have three lovely little guys, Luke, Lily, and Leo, 6'4" and 2, and 2 bulldogs. And we met in New York City. We met back in 2003, and it took Peely and I about 10 years to find each other, to actually get together. And at that same time, when we first got together in New York, Hurricane Sandy happened up here on the East Coast, happened in a lot of other places too, caused a lot of damage to just a tremendous amount of properties, hundreds of thousands of properties. Well, my father had started this niche company, and he'd been doing it for almost 4 decades, and that was lifting and moving buildings. And so when that happened, his business just exploded, right? And so my brother, who was working for me at the time in the city, came with me, and we moved out. Of course, Peely, my wife, came as well, and we started helping Dad really just take the business to the next level. So we helped a couple thousand homeowners by now lift their homes, get FEMA compliant. Throughout that process, this was a great learning lesson, a great vehicle, but we knew that this wasn't the end all. We always wanted to find a way to get our time back, right? So we were doing something that was so active that with the construction, if we could work, 25 hours in the day could have used it, right? Because there was that much work to do. So it quickly occurred to us that we needed to find that next step to our life. And we looked at real estate. Little did we know, we were finding more activity, right? So Peely became a realtor. We started flipping, wholesaling, doing all these things that was just creating more jobs, more stress, more things, and more time that we didn't have that was needed to get this done. And throughout the process, Peely met someone who was investing in estate, just small properties. And we looked at that model and we said, well, that just looks really good, right? We could set up a team, set up a process, and put that process in place and allow that process to evolve. And we did that, and it worked out wonderfully, right? We had these 2, 3, and 4 units out in Indiana, and they were paying great. But what just occurred to us that it wasn't financially full, right? So to take that to the next level, to buy 100 duplexes or 30 quads or whatever, so be it. Mm-hmm. It labor intensive, and it didn't have the right to it that we were looking for. And so saw someone buying an apartment building, so I said, how do you do that? And that was the step. That was that thought. I went back to Peely and said, we're doing great with these properties, but what if we would just buy a large property, right? Where we could basically treat it like a business. And we had that conversation and really just started seeing everybody who was doing that out there successfully, and dove all in, sold all those properties and just dove all in. And that led us to buying our first property back in 2017, which was a 94 unit. And that just magically was a great property. We actually sold it 2.5 years into the hold, great for the investors. And throughout the process, we've brought probably about 10 other buildings since then, I would say. And it's all about looking at it instead of looking at it from the point of, I can't, and just how can I? And that's allowed us to get many steps in our journey, is that asking that next question and keeping open-minded that if someone's doing it, there's a way and a reason they've done it. What can we learn from that? And we constantly keep that mindset in everything we're doing today, even running, right? So I run all these distances, to run all these miles. There's going to be people that tell me I can't all the time. I mean, people tell me why you can't, but there's always a lesson learned. There's always something that someone's doing that I can learn from. And even on the last race, I was running with a guy who was going to run 30 miles with me, and he was wearing a heart monitor. And I got to learn about that, right? Because now it's a new thing that I can incorporate for my next race.
Yeah. No, that's awesome. I love when people tell me that I can't do something. Kind of an interesting story, not to digress, but speaking to fitness and what really got me into ultra distance cycling. I bought a bike about 13 years ago with the intent of doing some triathlons, did a number of sprints and Olympic distances over the period of 2 years. And then, I don't know, I had something, it just wasn't right in my life. I needed something big, like a big fitness goal, right? I wasn't overly excited about the swimming aspect of triathlons. I wasn't in love with it. And I'm not a big fan of doing something unless you actually fully enjoy it. Like I'm okay with taking on big goals. But after a couple months or years, if it's like a physical activity, if I'm not enjoying it, I'm going to go find something else to do. I want to fall in love with whatever the motions are with that goal. And so in any event, I decided that I was going to ride my bike. I'd never ridden more than like 40 or 50 miles in one given setting. So I wasn't a huge cyclist. I did enough to get by at the triathlons, right? And I put a post up on Facebook that I wanted to ride from Florida to Washington, D.C. I'm from Pennsylvania. I was making a trip up there. My wife and I already had tickets booked on the airplane 6 months from this point in time. And in my mind, I was like, what if I just ride up there and meet her up there, right? I won't fly up. And I mean, it was a crazy idea. I didn't even know how to plan it. I didn't know any ultra cyclists. I didn't know anyone had ever done anything like this. And I put a post on Facebook, and someone I highly respected that actually was an ultra marathoner, had run probably 100 plus normal marathons throughout her 25-year running career, shot me down. And I was so surprised. I mean, she was like, people train for years to do something like this, Kevin. There's no way that you're literally blasted out on Facebook on my comments. There's no way that you're going to be able to complete something like that in the next 6 weeks. And I'm like, well, fair. I got to figure this one out, right? And so ultimately I did it. I did it in 11 days, 1,154 miles in 11 days by myself, with literally one change of clothes all the way.
Yeah.
And it turned into something bigger. Now we do an annual charity event where we've raised hundreds of thousands of dollars as a result of that one long distance event. So now we do a long distance one every year down here in Florida, right over 3 days down to Key West through the Everglades. And it's a pretty long, arduous ride, but we raise money and give it to, awesome charities that are near and dear to our heart. So, but it was spawned out of that really, you can't do it, Kevin. And turn around.
You know where the thought track comes is that they look at it, they look at the encompass of the race and say, that's impossible. You're going to get from Florida to DC, right? Like impossible. But they forget, right? Well, what's the first step, right? It's getting on the bike. What's the next step? Just start revolving the pedals, right? And because if you look at that like anything, right? If I was to say that, I'm going to climb to the top of the mountain, to think like, I'm going to leap to the top of the mountain. That's where people come. Like, that's impossible. But when you figure out you just got to put boots on and take one step after the other, that's when you start your journey, and that's when you get there.
Well, you know what it was? I just backed into it. I said, at this time of year, typically the sun rises around 7 a.m. and typically it sets around like 7:15 or so. And so I've got 12 hours, more than likely like 13 hours, because even once it sets, you got a little bit of light, right? And so I've got 13 hours in any given day to ride an average of 100 miles. So even with stopping, I was like, if I average is 13 miles an hour, like that should be nothing, right? I mean, like in my mind, like if I have to ride all day from sunrise to sunset, then I'll do it, right? And that's ultimately how I backed into it and kind of justified it in my own mind of I can easily ride 13 miles for a very long distance, right? I would normally ride like 20 on a normal setting. And so anyway, that was kind of the justification of how I could do it. And ultimately it turned out while I made it, it was, there were definitely some down moments along those 11 days, but it made me a bigger, better person when I was completed with it. So
I love that.
So anyway, but so back to, not to digress here, but I think that it's not even really digressing, because it really is an important part of who you are, obviously. And it's a huge part of who I am. And I don't think I'd be where I'm at in business today if it wasn't, for having, a healthy lifestyle and having big, lifestyle goals be part of it, right? Like if I didn't subscribe to that notion, I'm not sure I'd be where I am today. And I'm assuming you probably feel the same way.
Well, you just said something that's actually true to all formats, right? So you go this distance. Well, how do you do? You backed yourself into it, right? And so you backed yourself into it to figure out what are the actual steps I could take. And most people with our goals, like we come up with these big audacious goals, but they have no substance to it, so we can't make it real, right? So I want to buy 1,000 units. Well, what does that mean to you? Like, what does that have any meaning to you? Like you hear that all the time as a premise, but there's no conjecture, there's no reasoning to it, and then there's no ulterior actions to it, right? So So that means I have to, talk to 1,000 investors. I have to speak to 50 brokers. I have to identify exactly what submarkets I want to be on. I have to, locate and know exactly what type of properties I'm going to have to. Well, those become actionable, okay? Because now you can trade in, okay, I want to do this over 5 years or 10 years or whatever's the case. How many do I have to do, a month to be able to meet this? How many do I need to do a year? And when you start doing those things, it becomes something that you say, okay, well, now I just have to take that first chunk where we get to this New Year's, resolution effect. Like today, I'm going to lose 30 pounds within the month. And it's so outside of who you are that you can't accomplish that because it doesn't become your life. And that's where, even if you do lose that 30 pounds, so many times people put it back on because they haven't created that life mission, right? So you bike, you cycle, and that's what you do, because that's now, it's not like I'm forced to do this. I get to do this, and this is part of my life because you enjoy it, right? And if we had more people that would just get off the couch, just like, okay, to say that you haven't run, throughout the entire, COVID and you put on 30 pounds, to say that you're going to do a marathon in 4 days is probably, if you do it, cool, but you're probably going to crush yourself and not want to do anything else for 2 months. But if we said, I'm just going to walk around the block for the next 10 days, and then maybe I'll try and jog a quarter of it. Well, now you can at least start growing into that, and you make it part of your life.
Yeah, no, all great points there. And just getting back to that, the ride up to DC, I went out the weekend before. I'd never done a Century before. And, for folks that are listening that are cyclists, it's a 100-mile ride, right? A Century is a 100-mile ride. And I went out the weekend before, and I measured out a route Saturday and Sunday that was 100 miles. And I tried to keep that 13 or 14 miles. I went out for the entire day to let the sun beat on me, so I could basically try to replicate what it was going to feel like being out on the saddle all day long in the blazing sun. And I did it back to back. And I said, if I could do these 2 days, then I'm pretty sure I can do this 11 days in a row. I mean, that's kind of what I thought, right? And in any event, it was a lot of fun. And I'm glad to hear that you're doing big things, buddy. It's exciting. I wish more people would do it. And as we were talking about before we jumped on here, I personally feel like there's definitely been a lot more positives that have come out of this pandemic. And surely my heart goes out to folks that have lost loved ones or family members, what have you. But just generally speaking, speaking to the slowdown of life, the pace slowing down a little bit. Obviously, I've got a lot more quality family time in, and that's always been a huge focus of mine before the pandemic. But having the kids home and just throughout the day, 24/7, we made the best of it, man. We had a lot of fun. But in addition to that, got a lot more exercise and really got to hone in on focus on things that, they just tend to get away from you sometimes, right? Even when you set goals, sometimes just life gets in the way. And my wife and I made it a huge focus to not let life get in the way of just not necessarily reinventing ourselves, but just trying to be better people during this not so great time in history that we're all living through. So speaking to that, has there been any major changes in your family? Anything that you've done with your family or in the business as a result of this pandemic? Any big positive shifts that have come out of this?
I think everything's been, and again, is the virus great? No, those parts are not great. But what we found in this is to make the best of everything. And it created points. And I was talking to a lawyer on our podcast earlier, and he was talking about how, now everything's a lot of course, court has gone to video conferencing, all these things. And if COVID wasn't here, that would have been impossible. There would have been 7,000 committees that would have to go on all these different points. And it forced the hand. So it brought that forward, right? So sometimes when you have these points, you say, okay, we're all home. Now we can all be together. Now we're going to have these moments where we can take the time that we were so busy for before. We didn't have those couple moments to do this. And now we put those in part. We can start homeschooling. Peely is Hawaiian. So they were giving on, they do Hawaiian language school, with her mom, and she was off of school. And so during lunch, the two kids are speaking Hawaiian now, things that awesome. you don't really have time for, or you tell yourself you don't, you find the time. And when you start doing that, start building your day and start looking for the positive to this point, everything starts to change, right? The narrative starts to change. Just say, okay, I have all this time home. Well, am I watching Netflix, or am I going out there to say, I got time to read a book, or I got time to do that workout, or I got time to figure out, I don't know, how to do kettlebell exercises, or everything's online. So I have the world of my oysters now. I can, I think what is it? Harvard is offering classes for free. If you want to go take classes, you have so many opportunities now where you can look at what's available and seize it, because everything's right here. And people, who maybe before were so busy in their careers. I don't know. Think of this: actors, writers, all these things that are doing online chats, or doing these webinars, or doing these conferences, and so you're able to now be part of so many other things. And does it stop you to have that one-on-one connection? Potentially, if you want to look at that, or you have access to so many people, right? So if we didn't have what we have right here, you and I wouldn't be doing this interview, or maybe we would over like a telephone call. But here we are, we're able to have that point and talk to each other. So you look at that and say, well, where am I going to go from this? Instead of saying, I want to get back to normal, well, you never get back from normal. Like at no point are you ever normal. If I was, if this wasn't here, we didn't have COVID today, me a year from now would not be me today. So I'm never going to get back to the normal me, because that doesn't exist. What I can do is say, this is the cards. How can I make the best of it? Find the gems, build off it, and adjust accordingly.
Yeah, no, I love it. I was kind of giggling there. My wife tells me I'm not normal every morning in a very loving way. No, joking. Anyway, well, let's I'd like to shift it if we could, Jason. I'd like to move into some real estate conversations, but I'd like to keep it revolved around the pandemic, at least at this point. I'd love to get your perspective. I've asked this question in a lot of different forms over the past couple of months as it relates to the pandemic. Obviously, there's been progression. Things have changed. The market seems to be in a little bit better shape than what probably folks would have anticipated, 2 months ago or 3 months ago, what have you. But I think we can all agree that there's certain businesses that have gotten crushed and certain businesses that have done much better than others. The same goes with real estate, right? Certain asset classes that have done way better, multifamily, mobile home parks, self-storage have seemed to hold their own, whereas hospitality, hospitality's getting its butt kicked. Retail, and if it's not prime locations, or actually sometimes if it's got a big national tenant that's suffering or that was shut down for 5 months, that retail owner is suffering because they're not getting payments. And then office, I think office is probably going to be more of a delayed factor. I'm not sure exactly, and I haven't looked up the data on office over the past couple of months, but I'm guessing office will get affected in the long term as folks don't renew their leases. And in fact, I was actually on a bike ride this morning. One of the guys I ride with owns a huge brokerage firm here in Tampa. In fact, they sell and lease more office space than any other brokerage in the Tampa Bay area. They've been around for like 60 years. Wow. And I was asking him about the office market, what's happening activity wise. And he just gave me an example of a lease he just did in downtown Tampa in a older Class A building. That would normally go for about $40 a foot. It was a short term. They just signed a short term lease, and so it's not a 10-year or anything like that. But they did a 3-year lease at $15 a foot. That's a big discount. That's a huge discount. I don't know any other context. I'm sure there's probably more to the story, but generally speaking, I'd have to guess that probably wouldn't have happened pre-COVID, right? And so I think that office has a way to go before we see whether or not it's in the clear. But speaking to multifamily and being that in mobile home parks, either one, they've kind of made it through unscathed. And I'm of the opinion that a lot of multifamily and mobile home parks, especially more of the working class folks, a lot of them had been doing just fine, mostly due, or at least the ones that were out of work, mostly due to the stimulus checks, right? Stimulus checks or the boosted unemployment benefits, what have you. We know that went away at the end of July. And so there's been some time now where they have not received that income. We've been still holding pretty steady. Our collections have taken a very, very, very slight downtick, but nothing even to really speak of. I think multifamily across the board hasn't either. But what is your long-term perspective? Like, what do you think if there is not another stimulus bill passed to where, either they get some type of boosted unemployment benefits again, or a big check, or a combination of the two? Do you think there's going to be some pain felt in both of our industries, not just multifamily, but just both of our residential housing in general, landlords that have residential units that they rent to the working class folks? Do you think there's going to be pain?
So there's always two sides of it, right? There's pain before COVID. Like if you're not prepared, right, you don't have the right CapEx, you don't have reserves, and something comes up with a big monumental point, you might be in trouble. Well, the same thing now. Like if your building's heavily aligned in a city where it's driven by hotels and restaurants, most restaurants never put in their pro forma, like, what if we're at 0% income, right? So,
Sure.
Even on the worst day, like maybe we had a down month and we're 50% down at the worst projection, right? Well, it's the same thing with buildings, right? If you're running it real skin, and you have a big turn to come in to repositioning way before you'll cash flow a couple of years out, you might be looking at, just other buildings competing at a level here where they're not having rent increases, at least to that magnitude. So you're playing that point of hopefully being a serviceable building. But if you can create the environment and create a great place for people to live and take care of people and be that kind of landlord, you're going to have the best option, right? You're going to have the best options to succeed in any market, because people want to be where they're cared for, right? And instead of just saying, hey, it's me versus them, on both ways, and creating that divide, if you can look at that, it's been an approach for us is how can we make these better communities, right? And if we can make these better places to live for all of our tenants, that's not just a win for them, right? So not only does that make the building get taken care of better, it makes this a better place for them to live, so they'll stay longer, which cuts down on our vacancy. Now it makes the building perform better, which also now helps us in terms of returns, helps our investors in a huge way. So it's a trickle-down effect. And will there be jobs lost? Yes, some things are going to decrease, but in the same part, just like any downturn, there's going to be things that come out of it, right? So there's going to be businesses that explode from it, and things that can really take the next step. So will that be able to gain jobs? And so where jobs are lost, there'll be new jobs formed. And it's going to come down to the society wants to say, I'm willing to do that job, right? So we might have a lot more maybe construction jobs. So if people want to move from hospitality and construction, if that's their option, there'll be jobs there. And so it just, can people sustain to a point where they're willing to look for that next thing to do, right? And a lot of this might move, as we said, into online. You might have more opportunities with the Ubers of the world, or the Amazons of the world, or food delivery. Any of these things are going to create potential opportunities as long as people can keep the open mind to not be stuck where they are. Not, I lost my job. Okay, well, maybe this is the opportunity for me to step out, right? And so we've done the same thing, right? We've been pretty steady throughout. We have a little dip here. I'm pretty sure, we'll see some kind of stimulus, but you can't bank on that. I can't tell you where we'll be a year from now, because we can deal with what we have now and set up to give the best resources. Some of our markets have been amazing because they've also been providing resources for people that there's been some programs out there that have been available. So just keeping our head on the swivel to know how we can help the tenants, right? And if you do that, the tenant, the second that things turn around, are not going to want to run out that building. They're going to say, well, man, they helped us here. We prefer to stay in a building where we can create a life instead of every single time we've been here, it's us versus them.
Yeah, no, great points there. And refresh my memory. I think I recall maybe you guys own in Kentucky. Is that one of the states where you own property in?
It does. Yeah, correct.
Okay.
Yeah.
Okay. Is that primarily where you're based out of? Is the state of Kentucky, or do you have other assets? So we have
Kentucky, we have Pennsylvania, we have Georgia, and we're bringing our property on in Tennessee. Okay.
Fantastic. Yeah, have you guys actually purchased or acquired anything here, during the pandemic? Have you had any, investing activity in new assets?
We have, actually. So we sold one January right before it, which makes us look like geniuses on that front. And then we've purchased 2 properties that were deals prior to COVID. So we actually had them. And so, of course, created delay in there, created some changes, but it worked in favor where we did get discounts on both, walked into properties in nice parts. They're huge upsides on all sides. So the property's performing right now, even if we did nothing with it. And it's a win-win. We have so much opportunity to improve it, where it made just a great choice to move forward with each one. So one was in Kentucky, one was in Pennsylvania.
Got it. What were the grounds for the argument of getting a discount, if you don't mind me asking?
Actually on both cases, one was they were a little in Kentucky, right? There was some major electrical repairs they didn't, of course, put out to us, right? So disclose. And we got into them, and they were really pushing back on that right before COVID. And then this was not something they wanted to carry forward and have to go back to the market here and then renegotiate again. Yeah. It was a big thing, right? So it was something that with the transformer, it created a number of different layers, and they were pushing back on this but then once this happened, they had a different story, because this was not the model they wanted to continue with. It was a model they were testing out to do apartment buildings for as a carryover to one of their other businesses, and it didn't work well for them. So they were going to hold out, but then it didn't make a lot of sense, right? Now you have to go out to a market with a lot of unforeseen things. Same case in the other way is that that. It did change up some of our loan variables in the other market there. It was a property that the owner has a lot of properties, but this was the smallest one. So it was a 48 unit, and it was, sometimes you have a property, it's more of a headache than not if you have a 48 unit, a 300 unit. Mm-hmm. And for his aspect, he had all these bigger properties. This one's taking more attention than he wants. He'd rather not put the attention there. So with us having some change in our loan terms, he was open to a negotiation.
Got it. No, it makes sense. And have you guys changed your underwriting at all during this period of time with both those two assets or anything else that might be, kind of in the pipeline at this point?
Yeah, we've been putting, honestly, the rent growth that's potentially possible there. We've been much more, we'll say, cautious on that. We've been basically looking at it from perspective here of just getting units on as classic, not looking to push these units out as premium where we had the opportunity in some of these complexes. Because just Louisville, for instance, I'll give both, right? Louisville, for instance, the effective is at 57 cents a square foot. There is not one other building in that zip code, in that submarket, that's less than 92 cents a square foot. So this group literally was only using this as a stepping stool into their other business. They built houses and they were helping people with credit through the apartment building. So they were so under market, right? That you walk in there, and if someone wants to stay in the submarket, they can't. They cannot even get close to that. So anybody, and it's a beautiful submarket. It's actually my we'll say the highest household income for all submarkets I have in Kentucky. It's right down the street from a country club. It's a nice property. They just were using it as a stepping stone and didn't have the focus there. So the management operations, there's just so many ways to just clean it up to make the effective process easier across the board from front to finish that we'll be able to capitalize on there. Yeah. Same thing for the other one. We're actually rent 800 and we're leasing at 1195 right now.
Wow. Yeah, wow, that's a big push. That's awesome.
Big push. And it was, we were going to go in right at 1050, and we actually just did some Facebook ads. We did Facebook Marketplace prior to taking over. There was a unit that was vacant, and we just said to the owner, "Hey man, do you mind if we just test rent this?" And the guy said, "Yeah, go for it." The leasing company said, "Yeah, you should roll it out. See if you can get 1195." We had like 15 inquiries within the first 2 hours. We're like, "Well."
And that was in its current state prior to doing any improvements to that.
Yeah, building's really nice.
Okay.
And that's where some of the things you got to look at is you sometimes want to, you trust but verify, right? I got to see the building, went up and I said, it's a really good looking building for a 1975 building. I said, it's a really good looking building. So that's how it was being marketed. It was actually being marketed as like there's all one bedrooms at like 580 square feet. We walked the units and I was like, let me just check this out. So I went back in the tax records. It's a 1987 building. So not a 1975 building, which speaks a little to it. And then the units were 675. Measured them out myself. I had a tape measure and said, but I actually asked the broker, like, "Hey, where'd you get the numbers?" And he said, "Oh, I don't know. We just pulled them somewhere." So it just like that, right? Well, you find that, and now that builds to the story right there. You walk into a building that it works before you even know these details, and now that helps the narrative everywhere else. Because if you're looking at, okay, is the building's not 45 years old, it's 30 years old, and that's a lot on all different sides. So you can always look at what's being provided, but just check, right? Don't take someone else's details. Like if you're going to work on a deal with someone, even though you love them, mistakes happen on underwriting, mistakes happen on all fronts. Trust but verify, because it only helps the process.
Yeah, no, absolutely. All good points there. And speaking to that Pennsylvania property, I think, is that the one that's all 100% one bedrooms?
Yeah, correct.
What are some of the risks associated with all one bedroom apartments? I mean, what type of additional due diligence or verification, market study do you have to do in order to feel comfortable jumping into a unit that has, or a property that has no unit, I guess, variation whatsoever?
It comes down to the submarket too, and the job driver. Sometimes you can have this opposite way where you have all two bedrooms, and that's a disservice, right? The deal we're bringing on in Murfreesboro is actually all two bedrooms, and the one bedrooms are getting a premium right now because they're so underserved in the market. that they don't have, that you could, if we knock down walls, we'd probably be in a better shape. If we really wanted to go that far, it doesn't make sense on the cost, but we could provide more one bedrooms for that area. It would serve the market better. So you always want to know your market, know where the drive is, where you know your potential is. One bedrooms, they can be more transient. They can be people that are looking to do a number of different things that don't create or look for long-term. I've had this on other properties in Louisville where I've had it quite the opposite. A one-bedroom apartment, can be a couple, can be many different layers that put in there. And even if you look in, when I lived in the city, it's not such a drawback or a negative, right? So you want to look at your market, look how it aligns, look what's needed in that market. If you say, I want all 2 and 3 bedrooms, and it's so overserved out there that you have to offer concessions to get people in the door, well, is that the draw? Or do I want to look at my one bedrooms and say, is this something that's oversaturated in the market?
Yep. Yeah, no, I love it. Have you guys explored the Airbnb model in any of your units? I can't think of his name, but there's a multifamily syndicator out there. I don't know how many he's converted, but I know he's done it. He's tested a number of units in each one of his complexes and have furnished them and done the Airbnb thing. Have you guys explored that avenue at all?
I've had Airbnbs. And so what I'd say to that is that, sure, it can work in a market to a certain percentage, and you want to know your laws, right? There's certain cities, I think Louisville is one of them, that over 4 units, you can't do Airbnb. It's very labor management intensive. So you may say, yeah, I can get 800 renting it by the month, but maybe I get 1,600, operating it, as a short term, but you're spending twice as much energy on that property. Is it worth it to the project, right? Where the property we're buying right now, it's got a lot of month to month, and he actually does an odd week to week rental on some of those units, but I've never seen this before, and I was trying to make it out. No one stays week to week, but his management expenses, they should be operating about $4,500 a unit. They're almost $6,000 a unit because they need so much upkeep, so much activity, because you have to move and move out. It's a constant dynamic factor where if you look at the process, is stability better than that upside if you can control the narrative with your expenses.
Does that concern you when you look at a unit like that or a building that actually has weekly rentals? My only experience, the reason why I ask this is my only experience with weekly rentals happens to be in the mobile home park space. And I've run across multiple owners over the years that they have a rental model where, typically we don't like to own the home. However, they do. They own it, but not only do they own it, but they also have a weekly structure in place where, generally speaking, it will be an inflated dollar amount when compared to, say, flat monthly rate. And so if that unit would normally rent for $600, they might be charging $185 a week, right? And so they see the justification of doing it. Give the flexibility, make more money, but they're running rampant. And also that tenant base is, I've always, at least in our space, on that type of structure, I've always associated with more of a transient motel crowd, right? The ones that are probably only, they might stay 6 weeks, it might stay 12, but they probably won't stay a year. There's a good chance that they're going to be out of there before, a year, even close to a year anniversary comes up. And so is that what you think is going to be in this property? Is it one that you've just purchased or one that you're looking to purchase?
Coming on board. So no, we will not continue that process. So as you can imagine, the tenant profile, of course, will adapt. It's honestly a weird model because some people do get paid week to week and they try and keep in that point, and he's not really worried about a credit effect. And the guy has a lot of properties. He's developed a lot. And for whatever reason, this is something that he's brought on board that he wants to do. And it doesn't work to long-term stability. You would rather not have that point of you don't know who's moving in or moving out over the weeks. And oddly enough, he's got people that have been there 3 years on week to week. It's just, It would be amazing. So we know there's going to be about a 20%, 30% changeover in tenant base just from that group right there. Yeah. The thing that's the point is that before the upside he's getting there, he's not actually getting upside. The market serves that tenants will pay their utilities minus water, and they'll pay their cable, internet, and phone. For some reason, he's paying both. And so his rents right now at $700. You take out all those charges, so the effective rent's like $535, and the market is $850. With people paying on top of that, their electric and their cable and their internet. So you look at that, he's almost, you put it there, $300 under market when you put it all in.
And conservation is not a word that's in an individual's vocabulary when they don't have to pay for their electricity bill.
Yeah. And even cable and internet, you keep saying they want more channels. They want more channels.
Sure they do. Sure they do,
man. Yep.
Yeah. We had one property we owned years back that actually had a bunch of like studio apartments, and it had the water and sewer and the electric. It was too hard to go and put individual meters, and it wasn't a big enough property to even justify doing it. But I mean, very often would go by the property in, middle of summer, which is really hot in Florida, July, August, and doors would be open with the ACs like freezing up on the inside. And, it's because they don't care, it's like, whatever, I'm not paying this electric bill. I'm going to crank it up. Or in the wintertime, it's the opposite with the heat. They got the ovens and the heater on. It's like, come on, really? Anyway, exciting stuff. So moving on here, before we wrap up the show, I want to, again, speaking to any of the shifts that have been, direct relation to the pandemic. Are there any other outside of multifamily? Are there any other asset classes or opportunities that you guys might be considering today, but weren't, pre-COVID?
In terms of real estate, no, we've been staying in our space. Okay. We think opportunity is going to be there. And we've been, just like anything else, passively aggressive. I'd like to buy a number of deals, but I don't need to buy a number of deals. Like, I'm not going to push that narrative to have to do something. When opportunity arises, we're going to look at it and see how it fits within the portfolio and then move accordingly. And that will continue the narrative. There will be some opportunities out there that are going to fluster, and some of these won't be fully fledged out right now. I mean, we don't know what's going to be available until we see more. Where does the stimulus package help and hurt, right? There's going to be some industries potentially, or where does, is there certain cities that are impacted more than others? Or is there, certain guidelines that keep a city shut or a state shut longer than others? So we don't know all that context. What we can do is make the best choices with the data we have and then look forward. So right now, I'm still really stricken with multifamily. We've been doing a lot with our Fit Rich Life and our Jason and Peely project out there, just helping people really just get their life back on track. Just like you said, some people have made the choice to do nothing. Some people have made the choice to really detract and kind of huddle down until this is all over, or really get out there and crush it. And we're on the thing that there's never a better time than any time than right now to go out there and take action. So we've been doing a lot, just really trying to get back, just learn what we learn and learn what we're continuing to use in our days, just to help people along and help people just take action, like take just one step before the other. Tactical advice for fulfilling life is anything you can do to choose your next step, choose positivity, choose happiness, and not point the finger. Really just take control of what it is on that you can control, regardless of what happens.
Yeah, I love every bit of it. Yep. No, I wanted to, and part of that question I was asking about any other opportunities outside of what multifamily was, and then what came to mind when you were talking through like the one bedroom demand in that particular submarket is, even up to as of like 2 or 3 weeks ago, I started seeing a larger volume, and maybe it's just kind of like the red car syndrome. You get a red car, now you see all the red cars out on the road, right? On 10x.com, like a ton of hotels coming up for auction, a ton of
everywhere.
Everywhere. I wonder what the opportunity might be. I've got some friends that have done conversions over the years, finding a primo located, late vintage hotel, like a suite type arrangement, and converting it to one bedroom or smaller studio, or I guess larger studio type apartments. I'm wondering what type of opportunity could be out there for in those submarkets that has a demand for those smaller units for either single individuals or just a couple or what have you. Anyway, that came to mind, and that's it. That's very intriguing to me. That's not our space. We don't like to really divert from our space too much either. But I think there would be opportunities in niche projects such as that here down the road. Same with office buildings, right? Like what if it's no longer an office building, what's it turn into? Is it turn into a multifamily? Is it turn into a, I don't know, what else, event space, what have you? So in any event,
the one thing that keeps people on the sideline with real estate, and if there's anything to take away from here, is you stay in your space, I stay in my space. We're going to put stuff that goes within that space. But sometimes people get stuck in that narrative is like they're trying everything, but they're not mastering anything. Just like anything, you got to try what it is. Even if you find you don't like it, that's better than not doing anything, right? So if you find something, we had a conversation once, and it was the craziest thing. The guy spent like 2 years like learning everything about house flipping, and then the first house he did, he's like, I hate working with contractors. I was like, dude, you could have done this like but it was 2 years. Like, what were you doing? I was like reading, going to going to all these seminars and all this stuff. It's like, after a while, you got to try something. There's never a better way to learn than going out there and trying, because that's the best questions. I can't ask you a good question if I don't know, I can't get a good answer if I don't know what question to ask you.
Yeah, no, I agree with that. And I always like to say, stay your lane. I mean, for example, mobile home parks, that's what we have focused in. Bought my first park back in 2012. I've owned many other types of asset classes, but I've always, the shiny object, that's hard to avoid, man. It's hard.
Yes.
I get distracted pretty easy. And I know that. So I'm pretty self-aware and self-conscious of that issue of mine. Yeah. And so, we kind of made a promise to ourselves back in 2012. We bought that first park. Hey, let's prove the concept here. If it went well, let's buy a second one. But let's stay in our lane. Let's focus on this and become an expert at it. And only up until very recently, did we even consider adding another asset class to our business model. And it's very much in line with mobile home parks. It's parking lots, right? And so it's a very similar type investment. I've got limited investments in multifamily. I got limited investments, me personally, in self-storage and some retail. No hospitality, thank God. But like to say that we're going to go shift and go invest in those other spaces actively, I'd be fooling myself. I'd be doing a disservice to our investors, because there's no way that you can master all of the above. Now, I'm not going to say you can't. Some have. There's no way that we would be able to master all of the above and be the best in each one of those asset classes. I know that personally. Yeah.
If Peely was here right now, shining object should be pointing at me, right? There's always that point, right? But it's just coming down to it. It's like anything, like with exercising, right? Just do what fits in your life. Like just do it daily, like the same thing. Like you can always find the next diet for like, can you do that for life? No, because you'll be on to the next one if you're always doing these things. Like what works with you.
Well, Jason, it's been a lot of fun, my friend. Glad to have you back on. It's been way too long, and you've dropped a lot of just golden nuggets here throughout the show. Lots of great information. But what I'd like to ask you, if you had just one final golden nugget of advice or wisdom that that might inspire and motivate our listeners here today, as it relates to their real estate investing career, what would one last golden nugget be, bud?
You're always either one step ahead or one step behind someone. And so don't worry about where people are. You can only deal with where you are. And that goes for you and your life, right? So don't worry about what happened yesterday. All you can do is course correct with what you have today. And if you're waiting for something, you have to think, is this something, fictional? Is this something I'm making up in my mind? Or is it better for me to go out there and try, create relationships and push forward the narratives? We get so scared of what potentially might happen in a bad way, because that's easier for us to visualize than to think about like the greatness of the opportunity, right? So in 2012, you're like, Kevin, you're gonna be on your third fund. You're out here, buying all this mobile. If you were to think on that level, it would scare you because you've never done it, right? So you can't think of it being there, right? But when you think about, I buy a mobile home park, the entire thing might burn down. Well, for some reason, that's easier for you to think about, right? And so you'll go there even if there's like less than 1/10% of 1% that is going to happen, right? And so don't try and find why you can't. Ask the question, how can I? And that will lead you to anything you want in life.
I love that, brother. That's powerful. And, and for those that still want to try to justify the bad portion, obviously focus on the positive side of it. But for those of you that truly can't get whatever that bad element is out of your brain, out of your mind, do this exercise. Ask yourself until you get to the very bottom of the barrel of that answer is, what's the worst that would happen if this occurred? And then once you think you've got the worst, ask yourself that again and really put a lot of thought into it. And I can promise you that if you go through this deduction process, you're going to find that literally that worst case scenario, you're not going to die. You're probably not going to be in jail. You're not going to, it's not going to be life threatening. It's going to be something that you could ultimately work through, and it's not going to be the end of the world. Right. Yeah. And it's not that big of a deal. So I
like to call it the no one's going to take your dog theory, where no matter what you do, no one's going to show up tomorrow and take your dog if you pick the phone and call a broker. Right. And that's sometimes the worst thing. I called this broker. Maybe I said the wrong thing, and then he'll exile me from anything real estate across the universe. And it's no, man, pick up the phone, learn the right questions to ask, keep moving in, right? And that's just a lot how we go. We want to go to we go through that, feast or famine state where we're still looking okay, how do I eat, sleep, or survive, right? And if I do something like I'm thinking like a saber-toothed tiger is chasing me, when in fact, right, if I just pick up my phone right now, I can order food on my phone at my doorstep in 10 minutes. So let's focus on the positive and push forward from there.
I love it, brother. Again, a lot of fun having you back on, buddy. And please tell your wife, your beautiful wife, hello from me. And you take care of your awesome family that you have. And tell our listeners how they can learn more about you and what you got going on. What's the best place to find you?
Awesome. Yeah, go over to Instagram, Jason Yarusi, or you can check out our podcast, Jason and Peely Project.
All righty, good deal. Well, Jason, thanks for joining us on the show here today. And guys, and thanks for spending time with us here today on this week's show. And until we meet again next week, this is your host, Kevin Buck, wishing you huge success. You guys take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.